Hello everyone, my name is Anjani Kumar Khetan. I am based out of Bangalore, and in this video we will continue our deliberation on the video series which we started on potential accounting by the holders of cryptocurrencies. So before we deep dive, let us quickly recap for continuity purposes what we have already looked at in the last video. Now we have seen in the last video that two of the possible accounting, which is classification of the cryptocurrency as cash or cash equivalent, is something which is not feasible for the reasons we already discussed in the last video. Now in today's video, what we will look at these four additional categories of possible classification, that whether the holder of a cryptocurrency can that holder classify such cryptocurrency as either PP&E or an investment property or exploration for an evaluation of E&E, like some of the E&E assets, what we call E&E assets, whether this falls into the category of E&E assets, or is it a financial asset under the financial instruments standard. Now, considering the length of the video, we will restrict our discussion on these four categories in this video, and we will conclude our deliberation next week when we look at the other two categories, which is inventories and intangibles. And that will conclude our discussion on this three-part series. Now, let us first now look at whether a holder of a cryptocurrency, can that person possibly classify those cryptocurrencies as property, plant, and equipment. Now, to get an answer to that question, first of all, we need to understand how PP&E, property, plant, equipment, is defined under Ind AS and IFRS. So if you look at paragraph 6 of both Ind AS 16 from an Ind AS perspective and IAS 16 from an IFRS perspective, if you look at this paragraph 6, this gives the definition of what property, plant, and equipment is. So this, I have listed it here and kind of broken down the definition given in paragraph 6, wherein paragraph 6 says that property, plant, and equipment are tangible items, like what you can touch, feel, right? Those are the tangible items which are held for what? Held for these purposes, which are held by an entity for either use in the production. So if they are using some asset, okay, which are tangible in nature, and those assets are being used in the production process, or they are used for supply of goods or services, right, or rental to others, or for some administrative purposes, for facilitating the business, and those tangible assets which are held for these purposes, they are expected to be used for more than one period. So there are more than one financial year for which they are expected to be used. Then these tangible items meet the definition of property, plant, and equipment, right? So for example, your equipment, factory, any item of or plant and machinery, or for example, let's say a dumper, okay, or a payloader, things like that, which are used in the production process. They are by default, they are tangible in nature, and therefore they are defined within the definition of property, plant, and equipment under paragraph 6. Same way, for example, your desk, chair, those kind of a thing which is being used by the entity which facilitate or that will help in the supply of goods or services, okay, they are also within the meaning of property, plant, and equipment under IFRS and Ind AS. Likewise, if you are holding some tangible assets for rental to others, that can also be classified as property, plant, and equipment. And likewise, if you have certain asset which is held for administrative purposes. So for example, the office building or the factory building which is being used for production for producing the goods or services, they are also can be potentially classified as property, plant, and equipment, provided these tangible assets held for these purposes are expected to be used in more than one accounting period. Now the question is, given this definition, we need to test whether the cryptocurrency can meet this particular criteria. And as I mentioned, the intention of these PP&E is to generate revenue from operations rather than selling them off. And therefore, if you test this particular requirement of the definition of property, plant and equipment and the intention with which these assets are kept, and then try to figure out whether cryptocurrencies meet these criteria, you'll be able to appreciate clearly that yes, they are not able to meet the criteria. Therefore, considering the definition of property, plant and equipment, cryptocurrencies do not fall within the scope of Ind AS 16 or even IAS 16 and therefore cannot be classified as property, plant and equipment. Why so? Reason is very obvious, because these cryptocurrency, as we have seen in the first video itself, when we looked at the nature of these cryptocurrencies, and I mentioned, unless and until we understand the nature of those currencies, it will be very difficult to really appreciate the accounting. Now, having understood what is the nature of these cryptocurrencies, clearly they are virtual. They are not something which you can touch, feel, and therefore, since they are not physical, not tangible in nature, and therefore, cryptocurrencies cannot be classified as property, plant and equipment. Now, moving forward, let us see if they are not. Then the next question is, can they be classified as investment property? Now, we will continue to use the similar approach, and we will first see how investment property is defined under IFRS and Ind AS, and then we will see whether cryptocurrency meet the test of the definition of investment property under Ind AS and IFRS. So, coming back to that, if you look at Ind AS 40 and IAS 40, paragraph 5 of both these standards, they define investment property. And what this paragraph tells you? This paragraph tells you that an investment property is a property which is of these three nature, is either a land or a building or a part of the building or both. So it can be land or a building or a part of the building, let us say only a small portion of this building, or both land and building, right? So this is the nature of, these are the nature of the asset which can potentially be classified as investment property. And who is holding that? Who is holding such investment property? Either the owner of such land or a building or both, or by the lessee as a right of use assets under Ind AS 116 or IFRS 16 leases, right? And what is the purpose for which these investment property are held? The purpose is that these two categories of the holder, whether owner or the lessee, they are holding it for the purpose of either earning rental or for capital appreciation. The value, the capital appreciation and the value of the asset. Let's say if you are holding a land and the land value appreciate, that could be another reason for why the entity is holding the particular investment property or the land, or a combination of both to earn rental as well as also to have capital appreciation. And therefore, if you look at this definition, basically this definition gives answer to these three questions. What are the things? The three questions being, what is the scope? What is the scope within the definition of investment property? What is included? As I told you, from the definition of investment property, it says either land or a building or both or a part of the building, right? So this is what is included, the scoping of the definition of investment property. Then who need to hold? As I said, either the owner or the lessee as the right of use asset under the leasing standard. And the purpose, either to earn rental or capital appreciation or both. Now, having understood the definition of investment property under Ind AS and IFRS, we will again test whether this definition is met by cryptocurrency. Now, similar to what we have seen for property, plant and equipment, even this classification requirement is not met when it comes to cryptocurrency. Why so? Because considering this definition, what we have seen, cryptocurrencies will not fall within the scope of these two standards and cannot be classified. Why? Because cryptocurrencies, they are not they are not held, even if you may be holding the cryptocurrencies for capital appreciation, right? But it will be inappropriate to classify them as investment property, again, because they are not physical asset and they are not of these two nature. First, they are not physical, and the very definition of investment property says that it can be either land or building or part of it. Now, cryptocurrencies are neither land nor building nor a part of it. Okay, and they are not, so because of the fact that they are not of these two categories of the investment, and they are not physical in nature, therefore we can conclude that cryptocurrencies are not even investment property. You can't classify them as investment property. Now, this takes us to the third category of possible classification. Can you call that cryptocurrency is an E&E asset? Let us see, first of all, what is the meaning of E&E asset, and then we will look at whether cryptocurrency meets the test of that particular definition. Now, if you look at Ind AS 106, Appendix A to Ind AS 106, it defines what is an E&E asset is. So it says exploration and evaluation assets, and I will explain it right away. They are those assets. They are basically the E&E expenditure which has been recognized as an asset in accordance with the entity's accounting policy. What it is, let us see this chart. You will be able to find out what these E&E expenditure are all about. So now we are trying to deliberate what is E&E expenditure. Now, if you look at the typical non-generative resources, okay, the life cycle of these non-generative resources, let's say a mine, if an entity is getting into or buying, let's say a new mine, say a coal mine. Okay, now what happens? The typical life cycle of the mine would be that once the entity have done the prospecting or the initial feasibility of whether that mine has some value from a commercial standpoint, then it will apply the right to explore that particular mine is something which is, let us say, obtained at this point in time. And once that is obtained, this is the exploration and evaluation stage where they do more deep dive into the possibilities of that asset. And then the technical feasibility and commercial viability is established at this point in time. So therefore, if you look at this timeline, expenses which are incurred in this stage, wherein the entity is going and doing deep dive into the possibilities before the technical and commercial viability of the mine in my example is established. So any expenditure incurred in this period is potentially basically capitalized as E&E asset. So therefore, if you read these two definitions together, let us see the next one. What does it say? What is your E&E expenditure? Now, E&E expenditure are those expenditure which are incurred in these two stages, incurred by the entity in these two stages in accordance with the exploration for and evaluation of the mineral resources. Like what? That can be mineral resources like ores, let's say coal. It can be oil or it can be gases, right? So anything which is of similar type, which is a non-regenerative resources, right? So the expenditure which is incurred by an entity in connection with the exploration and evaluation before the technical feasibility is established during this period for searching these kind of minerals or your oil or your gases or any other your non-regenerative assets, right? Before the technical feasibility and commercial viability is really demonstrated and established, that is the amount which falls into the definition of these E&E expenditure recorded as E&E asset. Now the question is, given this definition, because we have seen this, there is an expression which we saw in the context of cryptocurrency mining. Now the mining what we saw in the context of cryptocurrency is not this kind of a mining. Therefore, although some crypto assets or cryptocurrency can be created by a process called mining, but that mining is not this kind of a mining which we just explained, right? And therefore, IFRS 6 and Ind AS 106, they will apply to the typical type of the mining, which is or the search for the mineral resources of this nature, like let's say the coal or your iron ore, or for example your oil or gases, before the extraction or the development work gets started. Now, considering this and considering the nature of these expenses, clearly we can say that in this case, even this standard, that is both Ind AS 106 and IFRS 6 from an IFRS perspective, they also cannot be applied for accounting for cryptocurrency. So what we have seen today, PP&E, no. Investment property, no. E&E asset, no. And in the last video we saw cash, no. Cash equivalent, no. Now this brings us to the last category for today's discussion, which is financial asset under the financial instruments standard. Right? Ind AS 109 read with, let's say, Ind AS 32 as well, which means corresponding standard in IFRS framework would be your IFRS 9 and IAS 32, like Ind AS 32 also. So if you read these standards collectively, let us see what and how they define financial assets, and using that information, do we conclude that cryptocurrency fall within the definition of financial asset? So, can cryptocurrency be classified as financial asset? The question is, if cryptocurrency is not cash, which we have already seen. In the first video itself, we saw cash equivalent, that test is not met. So if cryptocurrency is not cash, can it be under another category of potential financial asset? To get to answer to this question, we need to look at what is the definition of financial asset as given in the Ind AS 32 and IAS 32, and then see whether it makes sense or not, right? So if you look at, I have plotted here, if you look at paragraph 11 of both these standards, Ind AS 32 and IAS 32, the definition of financial asset in paragraph 11 has 4 limbs. What are the 4 components of a financial asset? Is cash or equity instrument of another entity. So for example, I is investing in equity instrument, say for Infosys or Wipro. So for me as the holder of that investment, for me, it is a financial asset. So equity instrument of another entity. So if I as an investor, I am investing in the equity instrument of say Infosys, Wipro, or for that matter any other entity, then for me it is a financial asset. So these are the first 2 legs of the definition of financial asset. The third leg of financial asset, as given in paragraph 11, says financial asset is a contractual right, right? Contractual right for what? Contractual right to receive cash or some other financial asset. A typical example could be your trade debtors. If you have the trade debtors, you have the right to receive cash from the customer, right? So that is the another leg of the definition of financial asset, which is whereby it is a contractual right to receive cash or some other financial asset. And in the third leg, there is one more definition. If you read it like this, that financial asset is a contractual right to exchange financial assets or financial liabilities under potentially favorable conditions. So for example, if you have, let's say, bought an option, let's say you have purchased a call option. Okay, so if you have purchased a call option, you have the right to exercise but no obligation, right? Let us say you have a call option wherein you are entitled by virtue of that option to buy, let us say, shares of an entity at 100 rupees. Now, if on the day your option is expected to get exercised, if on that day, if the price of that share is 110, then by paying 100 rupees only, you are entitled to get asset worth 110 rupees. Therefore, on that date of settlement, you have a situation where you are in a potentially favorable position of 10 rupees of the gain, against each option or each unit of the shares involved in my case, right? So therefore, you have a contractual right in this case. When the option gets expired, you have the right to get potentially favorable 10 rupees. You have the right to get, and therefore, financial asset is defined as a contractual right to exchange the financial asset or liabilities under potentially favorable conditions. That means purchased call option or purchased put option. If it is favorable to the buyer of that option, that can also be classified as financial asset. And then there are certain contracts which are settled in entity's own equity is also classified as financial asset. I have given you the content here. It is a slightly technical piece. We are just leaving it at this because for the purpose of evaluation of cryptocurrencies, this may not be too relevant to go deeper into it. Okay, but essentially, what you need to understand that in certain circumstances, if an entity issues its own equity instrument, those contracts can also potentially be sometimes classified as financial asset, as explained here. Okay. Now with this, if you look at, so I brought forward the definition which we saw on the last slide. So given this, we have already seen that cash, we have already seen in the first video that cash is not, the cryptocurrency is not cash. Okay. Likewise, when we say equity instrument of another entity. Now, this is the way classification of financial asset is. Can we say cryptocurrency is an equity instrument of another entity? No, because an essential feature of a financial instrument is that it is a financial asset of one party and liability or equity instrument of another party. So, the example which I gave, I as an investor, I am investing in the equity shares of, let's say, Infosys. Now, for me, it is a financial asset, as I explained. And for the other counterparty, Infosys in this example, it will be an equity instrument, right? So this is the essential feature of this particular piece. But then, cryptocurrencies do not provide the holder. No residual interest is something the cryptocurrencies do not provide the holder with the residual interest in the assets of an entity. They may get the cryptocurrency converted into cash if they want to, let us say, sell it somewhere and get the cash. But it is not an equity instrument of another entity. Same way, if you look at, and therefore they will not be classified as equity instrument within the meaning. Now, the definition of a financial asset we have already seen, it refers to these cash or a contractual right to receive cash. We have already seen this is the cash piece, and the contractual right to receive cash or some other financial asset. Now, in this case, the possession of the cryptocurrencies typically do not give the holder a contractual right to receive cash. We have seen that there is no counterparty which you can clearly identify. Okay. Likewise, cryptocurrencies do not come into existence as a result of contractual relationship. Now, in fact, if you look at this, is very interesting. Now, in the context of IFRS 9, okay, IFRS 9 have given additional guidance that they considered a situation whether gold bullion, can you call that it is a financial asset? In fact, they said no. Gold bullion can be highly liquid. You may instantly perhaps sell them and get cash. Okay, but there is no contractual right. A holder of a gold bullion, okay, same way a holder of a cryptocurrency, it may be highly liquid, but there is no contractual right to receive cash or some other financial asset which is inherent in the bullion, or for that matter, even for your cryptocurrency, and therefore it is not a financial instrument. This same guidance we will apply even for cryptocurrency. That means of the financial assets definition, 3 legs, yes, it is not, and cryptocurrency is not contract which is settled in the entity's own equity instruments. And therefore, if you look at all of these 4 legs of the definition of a financial asset, we have seen one by one. Cryptocurrency is not cash. It is not an equity instrument of another entity. And this also is not met, supported by the fact that under IFRS 9, gold bullion was classified as not a financial instrument. same principle will equally apply to Bitcoin as well. And of course, the Bitcoin or cryptocurrency is not settled in entity's own equity instrument. And therefore, holistically, if you read all of these together, you will conclude cryptocurrencies do not meet the definition of financial asset as given in paragraph 11 of Ind AS 32 and IAS 32. Right? Now, as I've been saying, things are evolving. At some point in time, there may be more features added, and at that time, maybe the answers change. At least that's what the IFRS Interpretations Committee concluded in June 29, that at the time they evaluated this matter. At that time, given the natures and of the cryptocurrencies, they concluded that cryptocurrencies do not meet the definition of financial asset. Right? So net, if you look at all of this, what conclusions so far we have reached? When we started with, I have given you this chart that these are the potential way in which accounting for cryptocurrency can happen. In the first video, we saw cash and cash equivalent. No, it cannot be. And in today, we have seen the other four categories. So essentially, if you sum it all, what we are saying, cryptocurrency is neither cash, nor cash equivalent, nor PP&E, nor investment property, nor an E&E asset or a financial asset. And we have seen in each of these cases why they are not. And therefore, now we are left with these two categories: inventories and intangible asset. Now, this is potentially we will cover in the next video, just to ensure that this video is not too long. Okay. And therefore, these two aspects we will cover in the next video, and then I will sum it all for you to see what is the potential accounting which the holder of cryptocurrency can potentially apply under IFRS and Ind AS. So we will continue our deliberation on the other two possibilities in the next video. As usual, this is the gist of some of those important videos, the QR code for them, which you can access on my YouTube channel. This is the link of my YouTube channel. Of course, many more are expected to come. Let's continue our engagement. Please connect with me. This is the link of my YouTube channel, and this is one which is the LinkedIn profile. So let's remain connected, and I'll see you in the next video. Thank you. Bye for now.